Good day, Divergence traders. How you doing today? It was a straight up day, right from the stock market open. So we're on the 5 minute. We're looking at the NASDAQ. Okay, if you look up at the top of the chart, you'll see I'm pointing to the 5 minute. That's the chart we're going to analyze. So let's make it a little bigger so you can see it. So just right here is 8 o'clock. We're going to start from 8 o'clock, okay? All right. We have a lower close right here. And on the opening of this candle right here, which is the open of the U.S. stock market, okay, you would have got long somewhere in there. So if you waited for that candle to close, you would have got long up here if you wanted to wait. That's your lower close candles. And the next trade I see is up here. It's a hookup. It's still going right now. We have the sell fake and then the buy it back up, and you would have bought it on the opening of this candle. And so far it went up just about 20 points. Okay, so we have a new divergence trader in the house now. His name is Jacus. So Jacus, if you're here, you asked me, oh, is there divergence on the 1 minute? So let's go and check out the 1 minute today. I don't usually cover the 1 minute, but today we will. Okay, so here's the 1 minute. And those are the ones I put in earlier. So all that we really had is, we didn't have divergence on this trade, on this 1 minute time frame. And I can see. Well, we did. Oh yeah, we did up here. But first, let me show you the trade setups of the lower close, buy it, and up it goes. The lower close in here, buy it right here, and up it goes. Okay, and then we had higher highs on the chart. A high and a higher heart. A high and a higher heart. No, a high and a higher high. Lots of H's in there. Higher highs. Okay, so if you would have, oh, hold on. See, there I go, getting ahead of myself. I forget to draw it on the OSMA, and it's so important. The OSMA is your key to success. Okay, so if you got in long right here, it went up like basically 40 points, okay, on the lower close candles. Now with the high and the higher high, okay, you would have got in right here from the divergence, okay, and right here all the way down, it went down 60 points, ladies and gentlemen. But also on the way down, we had higher close, sell it, down it goes. Higher close, sell it, down it goes. And there's another one, but we won't draw that in there. This needs to close near the 5, and it didn't. It closed too far away. But the next one opened right near the 5. You see, when we do the higher close, sell it trades, and the lower close, buy it up trades, okay, it's very important that the candle that closed higher up than it's open, okay, that's what I mean by that, okay, see right here, it's right on the 5, this is the 5, okay, and same here, right up on the 5, those are perfect sell setups right there, because they retraced and closed near the 5 EMA, okay, I just wanted to make that clear so you understand what I'm saying here. Even though it's very simple, the whole thing, but to explain it all in words, it's not so simple, okay? So we came down, the price came down. There's two more winners right there. Okay, so we had a low and a lower low, but on here, we did not, okay? We did not. See here, this one's coming down, right? See? Okay, I'm going to show you how this is not a divergence setup because it's doing the same thing the Osma's, the Osma is doing the same thing like on here. Oh, Jason, get it right. They're both pointing down. See, this one's pointing down, this one's pointing down. We need this one on the Osma, okay, to be pointing up. You see why it does not qualify for divergence to buy in here. Okay? Now I put this on a different time frame. Oh, I'm getting confused now. I have too many things on here. But anyway, those are all the trade setups for the NASDAQ on the 1 minute there, Jacobs. Okay? I hope you enjoyed what I showed you here. Okay. So let's move on now. Well, let's go to the 5 minute again. 5 minute. Okay. Now on the 5 minute, yeah, we had this trade right here, which is a lower close, buy it, and up it goes. Okay. Let's move along now. S&P. Let's see, what did the S&P doing? What did it do? This is the stock market open right here. See? And there's no trade until up here. There's no divergence here. No. So the only trade is you would have bought a dip. But as you can see, the 5 is above the 7. That means all that you could look for, well, what I would look for is buy, dips to buy it. And that's it. Okay, let's move on now to the Dow. Oh yeah, Wiki is as normal. See the wicks here? 3 wicks here, 3 smaller wicks here, another wick, here a wick, there a wick. Oh, whoa, whoa, whoa. No. Oh, Ron McDonald built a wick farm. E-I-E-I-O. Okay, the fucking crazy nut come out. Look at all the fucking wicks here. Jesus. Nah, I wouldn't trade in that shit. There's no way. That's the usual movement of the freaking Dow. It's just wacko. Don't trade the Dow. I'm not a financial advisor, but stay away from the Dow. Let's look at the pound dollar. Oh, the pound dollar had a trade. From 8 o'clock, it was a low and a lower low. Right here. And up we go. See what I bought in there, which was the stock market open, right? Yeah. 10 minutes later, 1640. If you would have bought it in here, it went straight up and you would have been good. You would have been good. It went up 20, the pound, 20 pips. It went up 20 pips. That's good for the pound. It sucks today compared to gold and the NASDAQ. Yeah, it sucks. What about the euro? It sucks even more. Who knows if you would have got in this one, but there's divergence basically in the same place. Low and lower lows, okay? And right here, up like that, and you would have got long in here. And how much did it go up? 12 pips? Oh, no, 15 pips. And there's no trade. Oh, well, there is. No, there is. There's a trade here. Would you do it? I don't know. If you love the euro, the queen, then maybe you would do it. Would I do it? Nah, I don't trade the euro. But yeah, you would have got short right here. This is hidden divergence, which I call hard to see divergence. You would have got short right there on the opening of this candle. And how much could you get out of it, max potential? Well, 10 pips. Okay, there you go. Okay, let's look now at the pound yen. Okay. Whoa. See, there's no divergence down here. We have a low, retracement, lower low. There's no divergence down here. And what about up here? I think we have a trade here, but it's a little tricky to see it and trade it. But that is a sell trade. Somewhere down in here, just below these wicks. See these 3 wicks? 1, 2, 3. The 3 amigos. Yeah. So just below the wicks right here, you would have sold it. And it went down 16 pips. That's it. And see, we have a low and a lower low. But this side of the OSMA needs to be less than this side. So there's no divergence to buy it in here. Up, up, and up we go. Okay? Instead, we have a lower close. Next candle, this one right here. You would have bought it. Buy it, up it goes. It went up 40 points. Okay? That's it for pound yen. Euro yen, was it better? No. No, it's worse. No, there's no trade. Okay, oil. What about oil today, ladies and gentlemen? Oh yeah. Oh, there's a setup. Let me show you. There's one over here from the UK session. I just wanted to throw it in there because we don't have much to talk about today. Okay? It's been a regular crap Monday. Oh yeah, and it's Columbus Day today. There's another reason we could say, oh, there's another reason. That's another excuse I didn't make any money today. It was Columbus Day. I don't know, 300 years ago, some Frenchman or Italian or Englishman, I don't know, from Europe landed on Plymouth Rock. Yeah, something like that. A few hundred years ago. Yeah. Just think of all our ancestors, how they're all gone. They've walked the earth and they're all gone. It's just the way it is. We can't live forever. Although there is talks that 400, 500, 600 years ago, they say there's people that lived 200 years old. I don't know. I really don't know. And we can never really find out, can we? Because it was hundreds of years ago. Yeah. Okay, so here's a trade here. Would have got long in here. Your stop would have been down here, 35 points. And how much did it go up? Well, it went up 40 points. Okay. And then we had this trade from here to here. And from here to here. So we would have got long up here. Right in there. Boom. And it went up 70 points for gold, ladies and gentlemen. Very good trade. No, oil, not gold. It went up to $75 a barrel from 73.68 down here. Okay. Yeah. And there's no divergence up here to sell it down. There was only this trade and this trade, 2 buys, and that's it. Now we can look at gold. I think gold is a big one, a good one today. Yeah, see? Look at that. First, I want to show you on the 4 hour. Is it the 4 hour? Oh. No, it was the 15. It was the 15 minute. Yeah. See right here, the divergence? Buy right here, go up. It was good for a max point potential of 187 points. And then we have divergence here. See here, higher highs, lower high on the OSMA. And we would have got short right there. And it was good for 130 points. This trade right here on the M15 time frame. So this is the thing. If you want to trade divergence and you want to spot it and find it, you really need to have, like, say your favorite was gold. Okay, you really need to have a 5-minute chart, a 15-minute chart, or a 10-minute, whatever. On all time frames, you can find divergence, and sometimes you won't find divergence. That's why it's important that if you keep an array of charts open, you can find a trade. You know what I mean? No, you don't need 10 monitors. You just need to, have 2 monitors and be able to split up the charts. See, like right here, if I click this, see, here is gold right here, and here is oil over here. See, I put two different instruments on the one monitor. So if you had 2 monitors, you could look at 4 different time frames and wait for the setup. That's it. And execute and make money. Yes. So anyway, let's see. Bitcoin. Oh, I got to do this here. Hold on. Oh, bullish Bitcoin. What's going on? Woo-wee. Here we go. We're going to make a new high and go through $75,000 per coin. Did I tell you my story back in 2011 when Bitcoin was $1? I had the opportunity to buy 2,000 Bitcoins, but I didn't listen to my business partner. I didn't do it. Oh, I want to cry. Oh, man. Anyway, I did the math back then when it went from $1 to $20,000. Yeah. $60 million I would have cashed in on. But woulda, coulda, shoulda, but I didn't do it. I didn't buy the 2,000 Bitcoin, and this is what happens. Yeah. Okay. There's Bitcoin. What about XRP? Did it go up just a little bit for JC? Oh, good, good. It went up a little bit. Oh, I've got to give it a little clap. Hopefully it'll take off to the moon. I don't know. Got to wait and see. And what about silver? Oh, up a little bit. And Ethereum? Oh, yeah, it's following Bitcoin. Up we go. Okay, and what about the US dollar yen? I bet you it's gone higher. Yeah, see, it's gone higher. I told you on Friday, I said, look at this. This is bullish now. It's going to go back up here probably. Yeah. Okay, so that's it for the setups for today. I want to thank you for watching and listening to my brief channel here. I want to say thank you to Jacobs for ordering my Divergence course. I am sure you'll be happy with its content. And yeah, so have yourself a great day, good luck, and good trading.